All right, everybody, how you doing? This is Nitty here with your daily ticker review. I've got 5 to go through. Let's just hop into the nitty gritty, as you know I like. So PSWW was one of the requests today. So we have all this information from, basically earlier in the year, leading back into late 2020. But this choppiness really isn't very helpful for us. You can see, even regardless of me saying that we had a bit of a wedge going on over here. And wedges, you either break up from them or you break down from them. And this one certainly was a breakdown. And around this area is when the volume started coming in and giving us this data that we're going to be looking at. So first thing, all the way over here on the left, let's zoom in, we're on the daily. You did find a little bit support over here around the 0.0878 level, it looks like. Bounced off it, came back down it, tried to get back over it there, but got firmly rejected. And then we came all the way down, swooped, and we hung around this 0.035, 0.036 level for a little bit over here. Now this is an important level because that is sort of our extreme bottom, you could argue right now. We had a swoop up over here, big volume day, creating this price gap. That price gap has been acting also as support down through over here, and also through this area. It's sort of been churning around that price gap area for a while now over here. But after that big move up there, we had a little bit of a flag there. That's a classic bull flag pennant right there for a couple of days. And then boom, we broke up from it instead of breaking down from it. We broke up. We did get into the 20s over here, 20 cents. That was a crazy run back in June. But then sure enough, huge dumping over the next couple of days. And then we churned around over here in another wedge type pattern. And then we broke down from that one. Very similar to over here, breaking down from the wedge, not breaking up from it. Where do we come down to? Well, we came down to this area, which was created by this gap over here, and that was sort of acting as support in this area. Ran up, but we could not get over the 8.087 mark, you might argue, and that now is an important level of resistance up top. It was what was acting as support over here, resistance over here before the big breakthrough, acted as support over here. It was a breakthrough that area of support. What do we say about support and resistance? They oftentimes need big volume, big bars to move through. So when you have a huge bar like that moving confidently through support, that's when you know you're probably heading down to the next support below that. So we've been churning around there. We could not get up over it over here in late August. Then we came all the way back down to this 0.048 level, which is sort of a quasi support level, you could argue. Kind of tapped off it over here after making through that gap. And then all the way on the right over here, we also found support at that 0.048 level, but then we did break through it the day before. And then today, this was today's price action. It moved up, moved down, and it kind of just ended a little short of the middle zone right there. Now there's also was a bit of these downwards trend lines that you can track from all the way back over here. One was slightly broken over here as we go into some sideways action, and then this top downtrend line was broken right over there. But if we extend this over to the right, you can see we are still in that downtrend essentially. We just haven't come back down to this downtrend line. But we are down in this area right now. Can we go lower? Absolutely, we can always go lower. I would peg that 0.036 level for a great bottom bounce play. We're on the daily. You do see the RSI slightly curling up over here, but there's no life to be found on the accumulation distribution line over there. That's still trending downwards. So I would not say that there's necessarily hope that this is going to be going up in the near future. So that means I am watching this 0.035 level down over here for this to come down to. If then buying volume comes in and you see that swoop happening, okay, this RSI would also be swooping with it. Let's quickly just throw on our EMAs real fast and see where we are sitting according to those. So let's come back out. And yeah, we have been firmly below all these moving averages for a while. We're kind of flatlining underneath it here. So long-term wise, could we see a swing up here and a break of all this? Absolutely. But it's all going to depend on news. It's going to depend on catalysts. It's going to depend on what this company is actually going to start to deliver. It does have a lot of eyes on it on FinTwit. People are into it in a sense, you could argue. Probably from this run up in June to 20 cents. It got on a lot of people's radars. But you'll see even then when it ran up there, it did not break the 200 moving average even. Get on top of that. That's when things become more bullish, is when you're above the 200. So immediate outlook for this isn't exactly the most stellar. Could be worse is what I'll say. We see here TTM squeeze is downtrending a bit. Nothing really useful going on here on the DMI. We're pretty much tight and coiled. There's a little bit of a hope in the stochastic full here, where if this purple can flatten out, red cross above, you could see a swoop and a gain on that area. But there's so many other things that the chart is saying that I wouldn't necessarily take this one indicator as a show of confidence. You want to have several indicators all pointing towards the same thing, and volume and price action most importantly. And right now you're just not seeing volume price action to the upside. This was a hopeful day over here, this big volume, big green bar, then 2 days in a row where we continue to uptrend. But then we lost the momentum here as volume dropped out of it and the ticker continued to drop. Then we had big volume over here and a big red candle down. And now we had half that volume and then a big volume day today as well. And at least we were fighting back and forth. At least this didn't drop even further than it had the day before. So I guess you could say there's a little bit of hope over there right now. But if you want to wait for the more perfect entry, I would see if it can get down to this 0.035 level-ish. So let's move over to the next ticker, TWOH. We're going to move as quickly as we can while giving you everything that I want to show you. So we're looking at the whole last year, basically. Lots of interesting price action. Actually, let's go a little bit further out. 3 years. Zoom in a little bit. Nope. So we had, dropping down from over here. I mean, it'd be great to get back up to a penny in that area, but let's just start analyzing from over here. You had this falling wedge pattern that oftentimes you will see a break up above, which it did. And then we have all this up and down going up to this area. Another breakdown here, downwards wedge, a pop up, a pull down, a pop up, a pull down, a pop up, a pull down, a curve. This is like when you want to get to know the personality of your chart, okay? But I'll warn you, you would have seen 1, 2, 3 runs up from, these levels over here. You might have said when it got back down over here, I'm going to see another pop up over there, but we did not see that. So don't be tricked by the third or fourth time that a chart looks to do something and then it doesn't. And of course, these last couple weeks here have just been murder in the OTC for lots of different reasons. We're not going to get into them anymore, but it's important to note down over here, 0016, okay, that was the extreme bottom over there. Then we skimmed along it again over there. So we are in theory looking for it to get back down to that area as a perfect buy. Let's zoom in a little bit closer here. You did have this price gap that was created just below 002 during this big volume push. So a lot of the buying volume that's happened on this ticker has happened above this area, okay? Look at all this volume, okay, compared to not a lot of volume here to the left comparatively. So if a lot of the volume is existing above this area, that area is going to act as extreme support, which you're kind of seeing over here to the extreme right, 002. It's stuck around that area for the last couple days. So could it dip even further, 0019, 0018? Absolutely. Do you want to wait before opening up a position for 10%? Maybe not. This is another great example of open up a third of a position here. If it dips lower and then hits either the bottom of the gap or even this 0016 line, boom, average down with another third position. Add the other third position on the way up once you have a confirmation bounce. But this certainly isn't a terrible time to go and start averaging in on this stock. If you like the due diligence, which I actually do like this company. They are a grocery store delivery company that are really trying to expand into various markets and up their revenue. So it's still an OTC company, so that means that it could dump. There could be lots of stuff that could go on. that you wouldn't like to see. But in essence, long term, at least they have revenue, at least they're doing something of intrinsic value, and not just looking for a reverse merger or acquiring crypto or NFTs, or they're not a CBD company or a weed company. They actually do have business, and they've been expanding. So let's look at the indicators. RSI is approaching this very oversold area around 30. We want to see bounces off those oversold areas. But much like the last chart, we're not seeing any uptick in the daily accumulation distribution. But we are very, very bottomed out there, which is oftentimes you will see pops off that level as well. Now remember, if this keeps downtrending with red bars, this green line will extend further down and there'll be a new bottom. So to say this is bottoming out, it's all just relative. So you want to wait for this to make higher lows and then a higher high, so that this was in fact the bottom. But before that, you can't tell until you see more price action to the right over here. There's no way to know if this is the actual bottom because you're still downtrending. You can, if you like, zoom in a bit and see if you can get more of a picture, sort of like a preview, you might say. But with that preview also comes potential false signals. So what are we seeing on accumulation distribution? Not much really. It's still the same thing. No uptick. RSI, let's take a look. You are seeing a bit of a divergence here, you could argue, as the RSI on the 4 hour is stronger here than it was here, but price, is pretty much sideways during that area. So not a terribly strong divergence. If this was price was very lower over here, that would be a classic divergence. But sideways price, while RSI is slightly rising on the 4 hour, a little show of some confidence there, but not something tremendously overwhelming. If we go back to the daily here, we'll see stochastic RSIs also heading south. The TTM squeeze did not end up going positive here, but rather started going back red again. DMI is just curled up here in a bunch, so that's not very helpful. So for this one, much like PSWW, my play would probably be waiting for a lower dip, okay, especially right now with OTC just getting sold off for all sorts of reasons. Not a terrible entry at 002, an even better entry at 0018, and possibly the lowest entry around 0016. So that's kind of what you're looking for there. Let's just hop back to the original set one more time, and let's go ahead and just take a look at our moving averages. And that's not going to be very helpful either. So let's just move on to the next ticker. We are at Strikeforce. Okay, so Strikeforce, this is my baby girl, my darling. This was the very first OTC ticker I ever bought. I'd only been playing big boards for 4 years. Found Strikeforce. I don't even remember how I found it. Way back in was it December, back in this area basically, before it made this run to 30. I didn't get it in the trips down over here, which would have been amazing. But it was on my radar around this area. And I rode it all the way up to 32 cents and then rode it all the way back down because I was an idiot, didn't know what I was doing at the time. And, I didn't realize I was getting into this artificial February, March, crazy, insane OTC market. And really what happened for a lot of these tickers is they pulled back down. You have bashers saying, oh, Strikeforce, it was 32 cents in February and now it's 5 cents down over here. What a piece of garbage. Well, not really. It pretty much just came back down to where it was originally valued at before this crazy, insane run started happening. And all that being said, you're still up a whole lot from this area back in November. So if you had bought it back in November, the run up to here would have been insane, almost a 10,000 gain. But even the run up to this area of 4 or 5 cents, you're still looking at over 1,000% gain. So it's all relative, guys. Don't let people convince you that just because a stock was big in February and it pulled back a lot, it's a piece of garbage. I'm not saying it's not a piece of garbage. It might be. Strikeforce, however, I do have a lot of faith and confidence in. Does that mean it's going to go up from here? Absolutely not. I am just a guy who likes looking at stocks. But there's a lot about this company that I'm really into. But we're not going to talk about the due diligence. We're going to look at the chart. So yeah, pretty much all this downtrending here, just kind of forget about it. I mean, this was just insane market here in February, pulled back down to where it should have been. This is what I'm interested in over here, the more recent price action. We do have this bottom price gap that technically hasn't filled, but it acted as strong support all throughout this area in the middle. So I don't think necessarily it's going to get filled. I think it was doing what it should have done. It was acting as support, you know. Then we popped up into this area. We created a big price gap over here with this volume day. There was another price gap here. That got filled over here, though. And we have sort of been churning around over here, okay? Up until this point, this is October 15th, 18th, there was a wedge going on, okay? Upward kind of bull flag going on. We broke up out of that bull flag. Got over the 10, 11 cents briefly, but then pulled all the way back down. But now look where we've been holding, okay? We've been holding right here, which coincides with this upwards trend line from this previous wedge. Also coincides with this 8 cents level, which is fairly strong as you know, resistance down over here. Then it flipped to support in this area over here, okay? So if we zoom, indicator-wise, we are in a little bit of a downtrend. There has been, you know, selling off and stuff like that going on. If we flip over to our other studies real fast, you'll see the same thing. You know, TTM squeeze downtrending, stochastic is downtrending still. But let's go ahead and zoom into the hour chart. Let's go a little wider time, 90 minutes, 1 hour. And yeah, you can see the price action a little bit better after this huge run up and pullback. It was resistance over here at around 8 cents. Then we were churning all along this line, popped up above it. It was support over here, popped up, rejected, came back down, 8 cents support again. And now we've been going between basically this almost 10 cents level, 0.098 you could say, and the 0.08 level, churning around in there. So do you want to buy right here? You could. I mean, again, not the most terrible idea to buy at this support because it has been proving to be strong support. But really you want to see how price is going to react off of this area, in my opinion. If it does drop below that, what's your next level you're looking for? 6 cents, you could argue. I mean, there are some in-between levels, you could say. Let's say you could argue, you know, maybe 0.075, which is, you know, a whole number in a sense, you know. You could argue maybe, you know, 0.065 right over there is another kind of in-betweenish level. I like to do dotted lines on those because they're not quite as strong, not quite as confident as some other support levels. But for me, this 6 cents level, which was support over here, that's the real level that it could come down to if it drops below that 8. If it holds this level, which is this upward trend line and this 8 cent support, then yeah, we're looking for it to break this 0.098 level, which is very close to 10 cents, psychological number. We want to get up over that. And then it needs to hold, okay? It can't just pop up above it and then come back down, okay? It needs to hold above that. Turn this old resistance, needs to flip into new support. And then at that point, you could possibly see a new run into the all-time highs of this 32 cents, okay? But until we get over this 10 cents level, it's all just consolidation around here. It's all just churn. We want to break that eventually. That may need to happen when we get more news from it. They are releasing commercials galore all over nationally, so hopefully that will help. So that's Strikeforce in a nutshell, folks. Okay, let's move on to HMBL, Humble. Okay, this also very similar to Strikeforce. Huge run up in February, huge pullback down to support levels. Can Humble do what Strikeforce has started to do and reclaim some of its energy? Let's take a look. So to find our levels, we do have to go all the way back over here. And a few things to notice. We had this price gap that was created around 42 cents, it looks like. Okay, very big. It got filled over here, but it's still significant. Okay, it still represents an area of high volume that is going to be a point of interest for chartists and for buyers and sellers. We had this wedge going on way back in the day that then broke to the upside. So this dotted line right here that I have drawn is basically the apex of that wedge. Okay, that's going to be important when we go and look to the right. So now we go over to the right. Let's take a look at this middle area. Okay, where were we coming down to when we finally came all the way back down? We're coming down to this 0.76 level, which coincides with back over here, 0.76. Okay, this was basically right before, after it broke out of this wedge. I've lost my place real fast. There we go. And so then it almost came down here to the 0.063 level, which was the apex of that wedge from way back in the day. Bounced back up, came back down, and now literally we are sitting right there, okay? We're sitting right at the apex level of that original wedge from way back in the day over here. So in a way, it's like we were wedging on the way up, it shot up, and now it has pulled all the way back. It bounced around, of course, but it's pulled all the way back, and we're right back at that level before it broke out, okay? So this could potentially be, if you're into this stock, if you believe in the due diligence, if you think it's going to go up from here, if you like the company, this is not due diligence, this is chart analysis, could be a very interesting place to buy all the way on the right over here, because that's where it kind of all began. Now you still do have this price gap down over here to 42 cents. So again, don't go all in right over here. If you believe in the ticker, if it's part of your game plan to buy this stock, which I'm not saying to buy it, you could scale in here at this important apex level of that wedge, which is where we're sitting right now, okay? Now let's look at some indicators and see if there's anything else that's telling us that this could be a potential buy in this area. So RSI made a low off this area right over here, very oversold, okay? Spiking off that 30 level. Now we're coming back down again. We're not seeing any signs of a turn, so this could continue to downtrend there. Accumulation distributions flat, if anything, curling down a little bit there at the end. Let's take a look at our other ones. Stochastic full. Red line is crossing bearishly across that purple line, so that's not necessarily showing me anything I want to see. You've got TTM squeeze is just, you know, basically neutral squeeze in the middle here. DMI not showing us much either. If anything, this is showing us that the red could potentially continue to the north, green could go south, which is not what you want to see. Again, I'll go over this indicator and others in more detail in some educational videos, but for now, just know you want green to go up, red to go down, purple to also start sloping up. That's the momentum, that's the ADX. These might be different colors on years, but this is the plus, this is the minus. I like to change my colors to plus and minus, green and red. So this isn't looking necessarily good here. Let's zoom in a little bit just to the 4 hour, see if there's anything else. On the 4 hour, we are trending down here on the stochastic. We're seeing some red increase on the TTM squeeze. So yeah, nothing amazing going on here in terms of this chart turning around anytime soon. Accumulation distribution hitting the bottom, RSI not looking good right now on the 4 hour either. So not looking good for a turnaround, but what is looking decent is that we're so close to these bottom levels of support, okay? So do your due diligence. If you like the company, check out the share structure, look at dilution into the future, all those kind of things. If it looks good, this could be an area to bounce. But you know, I'm not saying this ticker has this, but if a ticker is getting near a bottom support and they have a ton of dilution coming your way, then it doesn't matter if they're coming near bottom support. They're going to dump through that anyway. So don't think to yourself, okay, this has never been lower than here, you know, or this is such a low spot comparatively, I'm going to buy. Do your due diligence. Take a look at how many convertible notes they have. Take a look if they have any offerings coming up. See if they have steady revenue increasing, because if you have, you know, revenue and net profit going up, then you could potentially use that money to run the business. And you don't need to do offerings. You don't need to do convertible notes. But if they're losing money still, if they're bleeding money still, if they need more capital to function, that is what OTC companies do. They put out more shares to raise money. So again, not saying that about Humble. I don't know anything specifically about them. I'm just saying do your research. If you go on my Twitter account, I have a pinned educational thread on the top, and the first one is a nice 25-page due diligence sort of guide that'll help you out on what to look for in certain things. So last but not least, we have HWKE, Hawkeye, I guess. So this one's going to be a real fast one. Without even looking at OTC markets, I can tell you right now this is a low float stock. Tell me I'm wrong. This choppiness that you see both in the chart formation, but also the candlesticks, you can see them themselves. It's hard to kind of read these sorts of charts, okay? These are more find a low float that's near its bottom that has some amazing due diligence, that some amazing catalysts that are coming your way, and you just load up on the bottom. That's sort of what some people like to do with low floats, because if it does run, it'll run big because it's a low float. In this case, all I could give you is that you have this, you know, bottom kind of support around here, which is what, around 6 cents. You've got another level, you know, kind of up over here around 11 cents, which was resistance over here, support through this area over here. Got another level at around 15.24. It was, you know, support all through this area, resistance over here. And then above that, you know, you've got around 25 cents, resistance over here, support in this area. And that's pretty much all I could tell you on this one. I mean, yes, of course, the RSI popped up over here, the accumulation distribution popped up because it's low float and it had a big buying day over here, and then we had another big buying day over here today, up 43% on the day. So that's pretty much all I could tell you with this one. I mean, this could literally dump back down tomorrow and then pop back up 43% the next day. So low floats can be fun to play for that reason, but they're also not as reliable necessarily as chart patterns on other tickers. So that is the long and the short of it, everybody. Hope you enjoyed this ticker review video. Drop some comments in the comment section below or on Twitter. Let me know what you want to see for tomorrow. And happy trading, everybody. Nitty signing off.